weeks. We've started and we have done week 1. And of course, now we are on to week 2. So we have another 7 weeks to go. And it's all about giving you a good understanding of the following. So make sure you take a note. It is on the screen. So we start off with the foreign exchange market. That's where we started, abbreviated as FOREX. And then we have the sign language of the market. That is a candlestick. Now, a few changes took place since the last week that we went through candlesticks. Well, we're going to make life easier by making sure it's going to be a little rolling process. It's going to roll over week after week after week. So you all have an idea about candlestick patterns, just to make your life a lot easier. We will do candlesticks on a rolling basis. So every week you will be able to appreciate what those candlestick patterns stand for. And then we are going to look at the trading language of the market. Again, that's what we will do today. Last week we looked at pips. This week we will look at lot sizes. And as you can see on the screen, Ms. Miller will take you through it a little bit slower. But yes, we will be looking at the trading language of the market. And then we've looked at the trading view chart already. But as you know, we will be going through these topics. They will be rolling over the next 7 weeks. We started last week, so 8 weeks in total. And we will show you, of course, how to set up your practice account known as the demo account. And last but not least, how to place your trades in your demo account. At some point, we will hold your hands as you move on to from a demo account to a live account. So this is more or less a little breakdown of what we will be doing over the next 7 weeks. We've started on week 1, and yes, we have 7 weeks to go. So thank you, and I will now hand over to Miss Patricia Miller.
Good evening, everyone, and welcome. Again, as Mrs. Graham mentioned, going through the different weeks, what we will be doing, right? I hope you're making notes, right? Last week, we went through Forex, pips, candlesticks, and as she mentioned, we'll be going through each week. We'll be going over candlesticks to ensure that you understand what they mean. Okay, you will better able to, when you're on your charts, be better able to identify and to know, the meaning of these candles, right? And Dr. Graham looked at trading view last week. This week, we'll be looking at lot sizes, right? Again, I'm going to ask everyone, especially our new enrollees, to download MT4 or MT5 before next week, because we'll be assisting you, and helping you to link your broker to your MT4, accounts. Okay, so you can start in your demo account to do your trading, right? We'll be looking at indicators and support and resistance levels today. Okay, next week, we're going to go into trend lines, channels, stop loss. Again, the MT4, MT5, showing you how to set those up. And week 4, we're going to be introducing you to the BYOB cash out strategy. That's the basis, the foundation where we start, for you understanding the BYOB cash out strategy. And again, we'll help you to start setting up a trading plan. Every trader should have a trading plan in place, so we're going to assist you, to set up your trading plan and how to do your journaling. So this is what we have for you for the next 4 weeks. And again, we'll roll that over as we go on. All right, so make a note of the agenda here, the items we have outlined for you. And come prepared, bring your laptops, it's interactive. You can unmute, drop it in the chat, and we're gonna be having so much fun on this platform. Thank you, and let's all stay tuned. I'll hand over to Mrs. Graham to get us started.
Okay, so we are definitely going to get started. We are going to be looking at candlesticks. Now, for those of you who were here last week, those of us that were on last week, well, welcome back. We are looking at candlestick. Candlestick, yes, they display that information that you and I need. Yes, it actually looks at an asset price movement. And that way we as traders can interpret the price. Now we did cover the body, what the body represents. It's all here for you to see. Yes, it represents the open to close range. We would have looked at that last week. And of course, part of a candle, you will have the wick. Some of us know it as a shadow. So pretty much what it does, it indicates where the price has moved to the high, the highest point, and to the lowest point. Of course, you would have seen colors. Yes, we have colors, green, we see red, sometimes we see black, sometimes we see white, depending on where we are and what we're looking at. So the color reveals the direction of the market movement. And for those of you who would have seen what a trading chart looks like, you will see green. And depending if you're on your phone, you can also see a trade moving or the movement of price on your phones. If you're using a mobile phone, it doesn't matter. You may see white, which also means the same as the green candle, price moving up. If you see a red candle or a black candle, it's the same type of candle, and it simply means price is moving down. So ladies and gentlemen, let's hit this running. So we have bullish candlestick patterns. That is why we have got a visual way for you to see what these bullish candlestick patterns look like. It's all visual, and I want you to take 5 minutes this evening to focus, get your eyes into the habit of seeing and recognizing these patterns. So what have we got here? A hammer. Well, not like a real hammer, of course, but it kind of looks like a hammer. So the candlestick, the hammer pattern, is actually formed when we're expecting to see a bullish trend. Yes, we see the color of the body, it can vary. And when you see green hammers, you can see that circle around that green hammer at the bottom. It indicates a strong bull market where price is moving up, and it's usually stronger than when you see a red hammer. So be mindful. Yes, it has a short body with a long lower wick. That is how you recognize it. And then there is the inverse hammer. Now, this is really interesting. It looks the opposite to the hammer that we just looked at. Now, this one is called the inverse hammer. Again, it's a similar bullish pattern. The only difference is the upper wick is longer than the one we saw for the hammer, while this one is shorter, as you're seeing at the bottom. So you see a long wick at the top and a short one at the bottom. Pretty much similar to the hammer, and it is similar, pretty much, it's a bullish pattern. And then we have, these are all bullish, price moving up. Now we have a bullish engulfing. So we're staying with the bullish for now, and then we will look at the bearish. So what we have here is a bullish engulfing. It's formed, as you see at the bottom with that circular. You see a green, a candle which is much bigger than the red. So the first candle is short, red body, and the actual green candle is as though it swallowed up the red candle. And that's why it's called a bullish engulfing candle. So it completely is engulfed by the larger green candle. The red short body candle completely engulfs the larger green candle. So as you see, the larger green candle, much bigger than the red candle, and is as though it swallowed up the red candle. So we have the bullish engulfing. That's another bullish pattern. And then we have the piercing line. So you can see a red candle, you can see a green candle. And the information is all there for you to see. And of course, with the recording, you can always go back to seeing that pattern again, the piercing line. So actually, it's two stick pattern here made up of a long red candle followed by a long green candle. What actually makes the difference is you can see the price. So you actually see where the price is pushed up to or above the mid price of the previous day. So you can see where the price went on the red candle. And for the candle that followed, which is the green, you can see the close on the second bar was more than halfway up the body of the first bar. This actually indicates a reversal after a downtrend. And that is a piercing line. This is a pattern, which again is helping you to recognize a change, a bullish move. And then we have the morning star. What are you seeing here? Hope. That's what we call it. Hope in a bleak market, a downtrend. So we're looking to see a change from a downtrend to an uptrend. This is how it looks. 3-stick pattern. So you have a short bodied candle between a nice big candle and a nice green candle. And it signals that the buyers are in the market. They are on the move for the upside. So it means a bull market is on the horizon. So that is morning star. There is hope. And then we have our 3 white soldiers. Again, these are all bullish patterns, meaning price is moving, hoping to move to the upside. And we see the potential direction here is going to be an uptrend. So what does this mean? It consists of consecutive long green or white candles with small wicks. And you can see it again indicates a strong bullish signal, which tends to happen after a downtrend. So these are our 3 white soldiers, again indicating a bullish signal. And then we have bearish. Now I will hand over to Mr. Law as he quickly explains these bearish candle patterns.
Good evening, good evening. I am Mr. Law. I will be working along the BYOB educators, and my role is to support you with any potential technical issues. And I'll be explaining now the 6 bearish candlestick patterns. Like we can see now, we have here the hanging man. The hanging man is a candlestick that looks like the hammer, but it's in another color. It's red, and we can see that they have a long wick on the downside. And this is it's giving you the sign that the direction is going to be changing. After having a trend to the upside, we can see that here it's coming down. This is the hanging man. We're going to go to the next one. Here we have the shooting star. We can see here again, it's the opposite of the hanging man. It's a red candle with a long wick on the upside. And we can see that here after the market have coming up, and here it's getting to change. And we can see it here by this candle, the shooting star. We go now to the next one. And here we can remember that Ms. Graham talked about the bullish engulfing. And here we have a bearish engulfing too. And we can see here how the red candle swallows the green candle. So after the market have coming up, we can see here that it's turning back by seeing the bearish engulfing candle. We go now to the next one. the evening star, we can see here that after the market have coming up, we can see here like a doji candle, and where the market is coming down again. And this candle, we call it the evening star. Here, the 3 black rows, if you can remember, we have seen the 3 white soldiers, and this is the opposite of it. After the market have going up, we can see here, it's coming down with 3 candles that are getting bigger. And this we call the 3 black crows. And we go to the next one. Here we can see the dark cloud cover. And you can see that the green candle, after reaching to this point, you have a red candle that is coming next to it. And here it's giving you an example that the market is going down too. And here we can see 4 patterns of continuation candles. Here, the doji candle. The doji candle, we can see it. It's like a plus with a small body. You can see that the wicks are almost equal or equal with a very small body. The spinning top, you can see that it looks like the doji candles, but the wicks are a little bit longer, but the body stays small. And here, the following 3 methods, we can see that after we are having that the market is coming down, we see 3 bullish candles going up, but it continues again with a red candle going down. And we have the rising 3 methods is the opposite of what we just saw. Here we can see that the market is gonna go up. You see 3 candles like it's going down, but it's gonna continue again. And this is the candles for today. And I want to advise you to go through your BYOB Trading Academy to continue to see everything that we have explained, but you can get it into the depth and you can understand better what we are talking about when you come to the lessons on the Sunday. And I'm gonna pass the word for Ms. Graham.
Okay, so we are going to be looking at lot sizes today. So in this market, we have our very own language. We have our own language, which we call our own trading language. So pretty much understanding what lot size means is just a different way of communicating when we're in the market live and we're trading. So for example, when you go to buy some eggs, instead of saying 12 eggs, you might say, can I buy a dozen eggs? Now, without explaining to the person that a dozen is 12, automatically they will know that 12 equates to a dozen. So in the market, when we are looking at trading, we would have covered pips last week with Miss Miller. So we know how to calculate our pips for those who were on. We had a fantastic time calculating pips, but it doesn't stop there. We need to have a lot size that will work with the pips. So we know if we were going for 10 pips, this is an example, we cannot just enter pips. We need to have a matching lot size. That is a lot size of your choice. And again, you have to be educated on what the lot size should be. And again, based on the amount of money in your account, you will make even a more informed decision what lot size you would choose. So while playing around in your demo account, yes, you're going to be able to choose different lot sizes. That way it will reinforce when you go for a certain number of pips and you choose your lot size, it will help your eyes to recognize how much money you can make in the market just by understanding the lot size. So we have here lot sizes. They're different lot sizes. So when we see on here, we have a little graph, it says nano. So it's like understanding a nano is the smallest one. So we're able to see here 0.01. That is what we have for our nano. Actually, that is what we tend to use for our micro lot sizes. Most of us would do 0.01 for our lot to be able to understand a nano. So let me repeat that again. It's 0.001 for that nano lot size, 0.001. For a micro, we're looking at 0.01, one less zero. So there we can see it's $0.1 per micro lot. So for each 0.01 lot size, the broker will charge 0.10 for that micro lot size. And then when we move on to a bigger lot size, we're actually seeing 0.1, which is a bigger lot size than our previous 0.01. As you can see, the brokers will charge you $1 for a 0.1 lot size. And then as you move on to a bigger lot size, it's bigger than all the others we've just looked at. We see one lot size, which is standard, and it's $10 that the brokers will be charging you for a lot. So as you can see, a lot is a lot more expensive than the others. So if you were going for 10 pips, Mr. Law will go into that as we look at each one in a moment.
Here we can see what is your pip worth. We just have seen the lot sizes and the explanation of it. What's one lot, what's a mini lot, and one it's a micro lot. Here we can see that we don't have the nano lot because it's not used so often. And in much brokers, you won't be having the possibilities to use it. So that's why we are staying at these three lot size. You can see the standard lot consists of 100,000 units that we call one lot, and it's worth in pip. Every one pip is then $10. So we can see one standard lot. It's given like it's written like this. It's the number of units you can see, and one pip is then $10. And when we go to the mini lot, one mini lot, we write it 0.1 lot. It's 0.1 of the 100,000. So it's 10,000 units. And here for the mini lot, one pip is worth $1. And then we come to the micro lot. The micro lot is the smallest lot we are using normally. And we can see here is then 0.01 lot of the standard lot. It's 0.01 lot of the standard lot. And here we can see that one pip is worth 10 cents. If there is any question, you can put it on the chat so we know that everybody is understanding it. It's everybody understand it until now. Please put down a 777 so we can see it. Great. So now we are going to go to the next one. And here we can have some examples, what we can do with our lot size. If I say you made 10 pips, is that a lot of money? It all depends on what lot trade size you use. And let's see now how much money you can make by knowing now how much your lot sizes is worth it and how to put your lot sizes into work and how much it's going to be. So here we can see that one micro lot, like we just said, is 1,000 units. The volume is 0.01 of the standard lot. It's worth it $10. So if we have 10 pips, how much money we would earn? So we can do it like this, is 10 pips by 10 cents, we have $1. And like that, we can do it too with the mini lot. The mini lot is then 1,000 units. It's 0.1 the volume. And the pip value is $1. So if we have 10 pips, we can see 10 by $1, we have $10. And for the standard lot, that is 100,000 units, sorry, the volume is 1. The pip value is $10 per pip. And if we have 10 pips, is 10 by $10, we have $100. So like that, we have explained how much does your pip is worth it in money. And we're going to go to the next slide. We are going to do a little question and answers to see if you have understand it. Okay, we have a micro lot, and we're going to go for 10 pips. So we're going to see that the volume is going to be 0.01. It means it's worth it 10 cents. And if I have 10 pips, we can see that it's going to be $1. And the same if we have 5 pips by the same micro lot with a volume of 0.01. The pip value is 10 cents. So it's going to be 5 by 10 cents, and we're going to have 50 cents. And like that, we're going to continue with the mini lot.
Okay, Mr. Law, we could ask someone to give us the mini lots. I know the answer is probably still visible for them, but let's see if we have a bright star here who could do the mini lot on 10 pips.
Please, let's see how you could.
Anyone? Okay, we have someone. We have Mr. Newman, and we have Miss Priscilla saying $10. Okay.
Yes, that's correct.
Okay, so that's 5 emojis from us. Okay, and next, Mr. Law.
Yes. Now we did it easy because we can see here that the answers are there. But now instead of 7 pips on the mini lot, I would like to see the answer for 5 pips for the mini lot. let's see who can help us with the answer for the 5 pips on the mini lot. Nice, Mr. Nguyen. Great, I can see the answers coming in. Only 2? Is everybody understanding it? Because I'm seeing only 3 questions, 3 answers now.
Yeah, not bad. 4 and counting. Brilliant. Okay.
Great. Okay, so now we're gonna go to the bigger lot, to the standard lot. We can see now that if we go for 10 pips, the volume is gonna be 1, and the pip value is gonna be $10. So if we go for 10 pips on a standard lot, we're gonna be coming out onto $100. And if we go for the 20 pips at a 1 standard lot, that means that the pip value is $10. So 20 times $10, we're gonna be at $200. But now I would like to see in the chat, if we go for 12 pips, how much is gonna be? Please, let's see it in the chat.
We have some bright students, Mr. Law.
Yes, yes, they're catching it. So I'm happy to see that you guys are catching it. And this was then the explanation on the pip count. And I would like to pass the word to Ms. Miller.
Okay, that was good. That was good on your lot sizes. Okay. Good evening again, everyone. I'm going to be sharing my screen. I'll be walking you through, support and resistance. Support and resistance today, right? We're going to be looking at support and resistance. What is support and resistance? And this is a very key area that, you have to pay close attention to, because these are key important levels in the market. And if you understand your support and resistance levels, you will have a better understanding of how to enter and exit your trades, right? So this is quite key. When you go on your charts, if you understand where your support, where your resistance is, where they are, then you wouldn't be jumping in trades when you're not supposed to, and you will be exiting when you're supposed to be exiting these trades, right? So what is support and resistance? These are areas where price has reacted to in the past, and they can potentially react to in the future. So, and why do we drop these support and resistance levels? Because here it tells you, give you an idea as when, price gets back to these levels, you will have sort of potential trade opportunities. So these are key areas in the market. You want to know where they are, and you want to know how to draw them up on your charts. Okay, and we'll be going through a few examples later on. Okay, so these are areas where price has reacted in the past, and it has the potential of reacting going forward, right? So again, when you go on your charts, it's good to identify your trend. Are you in an uptrend? You have to understand like market structure. Are you in an uptrend? Are you in a downtrend? And that way you'll be able to identify your areas, where to draw them up, and how to read those areas, and how to enter, where you're going to enter and exit your trades. So we're looking here at an uptrend, right? We're creating higher highs, higher lows, higher highs, higher lows, higher high, higher lows. So we're definitely in an uptrend looking at this little marker here. I have this little chart. So, you know, when price goes up and then it pulls back, these high points, these higher highs, right? These are the resistant areas, right? Those are your resistant areas. And these resistant levels, they tell you that, you know, there's surplus of sellers in the market, right? So the higher, all the higher highs, this is where you'll find the sellers. When price pulls back to these low points, this is your support area. And this is where you're going to find a lot of buyers, right? So if you're an uptrend, higher highs, you will find your sellers. Those are your resistant areas. Your pullbacks will be your support, where you'll find your buyers. And the reverse is true if you're in a downtrend, right? On your lower lows, you'll find your buyers. The lower highs, you're going to find your resistant, your sellers, right? So this is one area, you know, you have to understand where you are in the market, the trend you're in, so you will be better able to identify these areas. So what are the criteria in drawing up these charts? What are the criteria? What are the traits in, you know, identifying the support and resistant areas? And this is where you need to make some notes, pay close attention. What are you going to be looking for, right? Number one, we're going to be looking for extreme highs and extreme lows. So when you get on your chart, where has the market been before? The highest point. Where has it, you know, the lowest point? You're going to, you know, mark those off. Number two, you're going to look at areas where you have multiple rejections, right? The more, the better, right? That's number two. Make notes, because we're going to be looking at some examples. Number three, the level should be quite obvious to you. You're looking at it, you should be able to spot it, because these are areas where, you know, traders, they're eyeing those areas as well. So looking at your chart, they should pop out at you, it should jump out at you, right? And another is the level should act as both support and resistance. And this area is key, guys. If that area acts as a support as well as resistance, you want to pay close attention. Another criteria, the move away from these areas, you know, they're quite drastic. They're quite, you know, like a breakout, okay? The move away from these areas are quite drastic. And these levels also have been respected recently, or it could be a level that has just been formed. So when you go on your chart, these are some of the criteria. These are some of the traits that you look for to start drawing your lines and to understand where your support and resistance levels are. All right, so make a note of this, because we're going through some examples, and I'm going to ask you to identify and to tell me which criteria has been met at what point, right, on the chart. So make sure you make a note of that. This is one area, guys, you cannot mess up, right? It's key. It's your lifeline in the market, right? Because if you enter at, you know, places you're not supposed to, you're going to get, your account is not going to be looking that good, put it that way. So let's jump on the chart and see if we can identify those areas, know how to draw them, right? Let's move over. Let me put you on. So remember, note these key criteria, okay? Let me bring you over now to the chart so we can look at a few examples. Okay, we're going to be looking at, again, our trading view, and I'm going to be looking at EUR/CAD, right? EUR/CAD. I open my chart, right? I'm on the daily, and I want to have some direction as to where the market is going. And by looking at it, you know, I'm definitely in an uptrend. I'm making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. I'm at a higher low. So I'm definitely in an uptrend, right? So how do I draw my support and resistance? How do I identify them? Just gone through. How do I identify? What criteria, what do I look for? Okay, and drawing up your support and resistance areas, You can use the line charts, that's one. And you can also have your little, drop your little zones. And I'm going to show you both ways. All right. So like I said, one of the criteria, multiple rejection at those areas. You're going to be looking at your highs, your lows, areas where, you know, it has acted as a support as well as resistance, right? It must look obvious to you, must jump out at you, right? So, and if you are able to mark up these areas, guys, you will be better able to take your trades and be profitable, right? So let's start. EuroCAD, and I'm going to be using my line chart. And for the line chart, you go here to your candles where you have the candles at the top, right? And you click line, okay? Let's start there. So this is my line chart. So at every little peak that you see here, guys, these peaks, this is where the trade has gone and rejected, you know, it's gone there, pushed, you know, rejected off these areas, right? So you can use this chart. Let me get this out of the way a bit. You can use this chart to help you to spot them a bit better. So, like I said, multiple rejections. So I'm going to use my little zone. Okay, I have 1, 2, 3, 4, 5 rejections off here. So this could be one of my areas, right? So that's one. Again, you look again. That's also an extreme high. We look again, 1, 2, looking across. Always look left, guys. See what happened in the past. Traders come here before. This could be one right here. You just draw them up right here. Oops. Right? This is another area, multiple areas of rejection, guys, where the traders come, just pushed off a couple of times. This is one area we could draw as well, right? That's one area, okay? And you know what? I am going to put this in a different color because I want to ask you guys something after. I'm going to let you guys, okay? I'm going to put this in a different color. Okay, let me spot. Okay, again, we can look, as we said, extreme highs, lows. This was a low point, look left. As the trade come here before, let's have a look. Moving to the left. Won't allow me to go back any further. But this is what from 2017. So this is one area as well. It has been to this low area. So I'm going to draw one here. So this is how, guys, you will come in and you will mark your charts, identify your support and resistance based on those criteria I mentioned earlier. So I'm going to get off the line chart and let's have a look to see how close we. Let's have a look. Okay. Do you think we have captured, highlighted most of the support and resistant areas based on the criteria? Drop it in the chat or unmute and let me know. Do you think that we have captured most of the areas? Tell me on my first one, my yellow, what criteria was met on that first level? Drop it in the chat. What criteria do we have to make this a good level on my yellow, my first? Drop it in the chat. Extreme high, good, that's one. Next, come on guys, drop it in the chat, get, yes, 3 touches, good, right, that's 2. More, come on. I gave you about 6 so far, good. Extreme high, easy to spot, good. Yep, because we've been there 1, 2, 3, 4, nearly 5 times, good. What else? What about these areas? Come on. So on my yellow, Okay, extreme high, good, level was respected, excellent. What about my red level here? What can you tell me about this red level? What criteria do we have to make this a good level on the red? Drop it in the chat, come on. What, no, on my red. What makes this a good level? On my red level, what is happening here? What makes this a good level? Why, I wouldn't say like extreme low. Let me see. Yeah, touches both as support and resistance. Excellent, excellent. We came down here, support, we found support. Here it's resisted off this area. We break through this support, came back and retested and resisted, came back, touched, resisted, you know, looking right here, resisted, and we found support, right, good. Both the support and resistance. And I'm telling you guys, when you have a level that is both a support and a resistant level, you need to pay close attention. You know the market, you know the traders are eyeing those areas. Those are areas of good opportunities, right? So you want to pay close attention to those areas. Again, we have, drastic move of those areas most of the time. They touch, drastic move down, rejection, right? Resisting of these areas, drastic move of these areas. What about my blue line here? What about my blue line here? I think this one I can, thinking. What about my blue line? What makes this a good area? On my blue line, what can you see? What can you see on my blue? Multiple touches, good, whoops. Yep, good job, multiple touches. And guys, you want to at least say 3 or more. The more, the better, right? So when you have these areas, guys, you come to your chart, draw them up using those criteria I mentioned. Good, resistance, good, right? We came here, support. This was, we had support here, support, going down, up again, coming support, right? We have, this is a good area of support and resistance right here, right? Multiple touches. So this is how you're going to identify those areas in the market. And if you can identify those areas, you're not going to be jumping in any trades, at those areas. Because if let's look at where we currently are, right? On EuroCAD, we've gone to our extreme high, rejected. Tried again, rejected. But look where we are, right? Another support, resist, another support. So are you gonna be coming here and taking any trade? You see it selling. If you don't have, if you don't draw your support and resistance lines, right? And you see this selling, you might want to jump in the trade for a sell. No. You're gonna be stumped out because look, it's rejected off this area. So drawing your support and resistance lines, they're very, very important. They're your lifelines in the market, right? So you have to ensure that you draw them up, know where they are, and you know that you're not going to be entering here for any sells because we've come here before when we have multiple rejections. So you're going to wait. Again, wait for price action before you do anything at these levels. You wait, patience. Okay, patience. The more the criteria, that are fulfilled, the better this level is going to be, right? And if you understand where they are, how to draw them up, you will be better. You become a better trader because you're going to know when you're going to enter your trade and when to exit. You're not going to be taking any trades around this area. All right. Good job. So that was EuroCAD. Let's look at AUD. Let's look at another example. Right? Any of you guys on here, do you have your laptop open? Drop it in the chat. Do you have your laptop? Following on with us with your laptop, drop yes. Okay, so Linda, I'm gonna ask you to share. And I'm gonna ask you, Linda, if you can draw the support and resistance line on this chart. You think you could do that? You could try that, Linda? You think you can try that, Linda?
Miss Miller, she said yes.
Okay, she said yes.
Hold on. She might need to say yes again.
Yes.
Be able to put another yes if you can, Linda.
Anyone else apart from Linda? Anyone else have their laptop this evening? Or do you have an yes?
And type slow. Yeah, that's
okay.
fine.
All right, Linda, I'm gonna give you a share. I'm gonna remove this. All right, see, you got some clue, but I'm gonna remove this and I'm gonna let you identify, to draw this up, to identify the support and resistance levels on this chart, 𝐴UD. Okay. So can we assign share to Linda?
You need to stop sharing so Linda can share.
Yes. Go ahead, Linda. Let's see you drop your support and resistant areas.
In the interim, Miss Miller, you could probably get Linda to say if she's got 𝐴UD already up.
Okay.
If not, we could ask someone else to tell us if they've got 𝐴UD up, so we could have.
Anyone else with a laptop? Anyone else? Can they annotate on here?
Not sure about the annotation.
Okay.
Anyone
Just 1
else?
minute.
Sure.
So I could put it up and they, draw it on my chart.
Not on this one.
On this one, okay.
No, cool, sorry. All right, Linda doesn't seem to want to draw, so just.
Okay, anyone else with a laptop want to have a go? Want to try? Okay.
Not yet. I think maybe by next week we will have a brave soul.
Okay, let's try then again. 𝐴UD. We're not going to be looking at the line charts, okay? So you're going to tell me where I'm going to put these support and resistant areas, okay? See, I've started one for you at the bottom. I've done my extreme low. Okay, so guys, go ahead. Where can I find my support and my resistant areas? You tell me where. Where can I find them?
They could give us some prices.
Okay.
So we know what price.
Okay. This area, is this a good area? Where I have my line 95040. Where my thing is at now, can you see my? Yes, good. So this is an area, okay. We have come there before, right? And what's this area? What has it done at these levels? Drop it in the chat or unmute. What happened at these areas?
Rejection.
Rejection, good. It says rejected of these areas. Right, good job. Trying to get this one here. Right, we have some rejection of this area 3 times. Right, and like we said, if you have multiple rejection, the more, the better. All right. Okay, I'm gonna do one other area. What about here? This area. I'm not gonna make them so big. Let me Small it up a bit. What about that area? What can you see? What can you see at this area? Drop it in the chat or unmute. What do we have at this area?
Support and resistance touches.
Good, good. Yes, we have right here. What would you call here? At that level? Would that be a support or a resistance right here? Where I'm putting my green, where I'm putting these arrows, what areas are these? Support or is it resistant? Tell me.
Oh, the first one is support and the second one is resistance.
Right, and this one?
Is resistance.
Okay, good job. Right, and I'm telling you, at these areas where you have support and resistance, those are significant areas. The traders are eyeing those areas, right? And you want to pay close attention to those areas. Good job, right? And that's how you guys are just going and you draw them up. Identify those areas. 3 or more touches, right? 3 or more touches. And then, you know, you draw up your zones right there. Draw them right there. Again, what level, what area is this one? What level is there? What level? Is it
Support. That's
or resistance?
support. That one looks like support. Which one are you looking
This
at?
one?
Yep, that's support.
This one?
It looks like resistance. It's kind of hard to tell without the line chart, but it looks like.
So this is, it came here, rejected, came here, rejected. So it's found support here.
Support, both of them are support, it looks like.
Yep. Like we mentioned, you know, the areas of support is where we find, you know, surplus of buyers, right? Your rejection areas are where you're going to find a lot of sellers. And that's it, guys. Once you can identify it, where they are, use the criteria, the more the better, right? The more confirmation, the better, right? You won't be entering any trades where you're not supposed to. So it's best you come on your charts. The daily gives you the direction. Your higher time frame gives you the direction, right? You know where your trade is going. And by, you know, knowing what trend you're in, uptrend or downtrend, you know, you will know when to enter the market. So always, always drop your support and resistant areas. Look at those highs, look at those lows. You know, look at areas where you have support as well as resistance. Look, make sure it's obvious. You might have little ones in between, you know, and those little smaller ones, those are like for your intraday traders. But look at the highs, look at the obvious areas. It's been there. You can see it. You go on the chart, you can see it. Just like these double, you can see it. It's clear. It's been there, right? Identify them, draw them up, and you will be a much better trader because you will understand where these trades are going. You will know when not to enter. You will know when to enter and when to exit. Any questions, guys, drop it in the chat. If you have understood, 777. And next week, guys, come with your laptops, right? So we can have fun together, okay? Come with your laptops. Okay, you're all clear? Good job, guys.
Yeah,
So
we've got 777s.
Yep, a lot of 777. Good job, guys. So just understand how to draw them, where to, you know, look at your criteria, always remember those, and you will be good to go when you're doing your trading. Thank you so much for participating. And I'll hand over now to Dr. Graham. Next week, again, we maybe can look at a few more, come with your laptops ready. All right. So we can learn together. All right. Over to you, Dr. Graham.
Hi, my name is Dr. Graham. I'm the BYOB educator, usually intermediate, but tonight I'll be on your basic session. You must say thank you for Mrs. Graham and Mr. Law Ms. Miller. They've done so well so far, and I think we should give them some fire emojis. They've done really well tonight. You guys have also done really, really, really well. It was a pity that Lyndon could share her screen, but hopefully going forward, we have a lot more interaction where everyone can share their screens and they can unmute their mics and speak. For me tonight is going to be, or this evening is going to be looking at indicators. All right, but basically what I'm going to do is to pull it all together. You can pull from the lot sizes, from the support and resistors, and we can put indicators together. So on my screen, you know, last week I did the trading view chart, and you can see it on your screen in front of you here. Looking at the trading view chart, we're going to look at that. That's my, I love this. I love trading view chart. As I said before last week, this is where it all happens. This is where it all happens. This is where you pull everything together, put it together to come up with a profitable trade. So this is where everything happens. So indicators. So at the top of your screen here, you will see a little thing that says indicators, and you can go down a drop down menu, and there's so many indicators you can choose from. There's so many indicators, but for the BYOB platform, we're going to looking at probably two. One called the parabolic SAR and your stochastic. All right, and you can choose that from your indicator list. All right, so here we go. We are looking at our trading view chart. We can see our candles here, which are our Fibonacci candles. And below here, we can see some lines, blue and red. This indicates or notes our stochastic indicator. All right, stochastic, S-T-O-C-H-A-S-T-I-C, is a momentum indicator and is a leading indicator. So leading means that it helps us to determine where a trade is possibly going. So it gives us a foresight or hindsight of where trades might be going. So let's go down, let's break down the anatomy of this indicator. So we have a blue line and a red line, okay? Now, I know that sometimes I prefer my lines to be a little bit thicker sometimes, and for teaching purposes, I make them a little thicker so you can understand and see it better, okay? You got a blue line and your red line. Let's make it a little bit thicker. So here we go. So the premise of this is when your blue line crosses below your red line, or your blue line crosses up above your red line. Okay, now here we go. Look at this chart. We have NZD/USD in the 1-day chart. I choose the 1-day chart because you can see it much smoother. Here we go. So you have your blue line crossing down below your red line here, and you have your blue line crossing below above your red line here. But also looking at the stochastic indicator, you come to the right, you will see there's some numbers. It goes from 0 up to a 100, but usually on your chart, you can usually see 20 to 80, and there's a blue area in here. This area is the area that we are very much more interested in at the present moment. So between 20 and 80. When your stochastic indicator, your stochastic lines go above the 80, we call them oversold. Oh, sorry, overbought. When it goes above the 80, we consider it overbought. When it goes below the 20, we consider it oversold, all right? So basically, the stochastic indicator tells us when a commodity goes above or below. So when it's overbought or when it is usually oversold. So stochastic works at extremes. If it goes to the 80, then it's overbought, then we're looking for it to sell. When it goes below the 20, then it's oversold, we're looking for it to buy. So that's a basic understanding of the stochastic indicator. So stochastic, so you're looking for when that blue line crosses below the red line, or when that blue line crosses up above the red line, usually around the 80 or around the 20, all right? So here I've drawn up some for you. So this is the oversold. So price is gone all the way down to be selling all the way down to the 20. So at this level here, we call it an oversold. So on the stochastic, is an oversold area in the market. We go back up to around the 80. This is an overbought area in the market. So we have oversold areas and overbought areas. So what's interesting for us to know as basic and a basic understanding of stochastic is you need to look to see when your blue line crosses below your red line and when your blue line crosses up above your red line. Those as basic as it gets. All right. You don't need to know what the two lines names of them. There's a long names that you don't need to understand. Remember your blue line and your red line. When it goes up to the top, your blue line crosses below your red line. At the bottom, when it goes all the way down, your blue line crosses up above your red line. So those are the two things you need to understand when it comes to stochastic indicator. Okay, now PSAR, the little dot up here, because on the dot is the PSAR. That's also an indicator that stands for parabolic stop and reversal. Now I can also make that one a little bit bigger for you. Yeah, here it is. Let's make it a little bit bigger so you can see it a little bit bigger. All right. I like to see it so you can see your dots a little bit bigger. Now these are what we call parabolic stop and reversal. Very, very, very simple to understand. All right. Very, very simple to understand. If they're above your candles, you're looking for a sell. If they're below your candles, you're looking for a buy. Okay. There's nothing more, nothing less. Above, pushing down, below, pushing up. So when you find your parabolic SARs above your candles, you look, it's pushing down. Okay, it's pushing the trade down. When you find your PSAR below, it's pushing up. Okay, parabolic stop and reversal. Also, a very useful application for the parabolic stop and reversal or your PSAR is for your stop losses. Okay, very, very useful for your stop losses, because the mere fact that your PSAR is above or pushing down, that means that you can set your stop losses around these areas here. Okay, unlikely to hit these stop losses, but these are areas where you can set your stop losses. We go into stop losses as we get into week 3 and week 4, and then we repeat again next month, again week 3 and week 4. So we go over stop loss a couple of times, but a useful thing we can use for the PSAR is our stop losses also. And it gives a good indication because it says parabolic stop and reversal. So that indicates that there's some element of stopping with this indicator. So let's go to application now. Let's go to application. So here we are. So let's look at here. All right. So we can see that your blue line crosses down below the red line. So when your blue line crosses below the red line, about the 80 or around the 80, we're looking for a sell in the market. Okay, the blue is going down, price is decreasing. So you want to see price decreasing. So let's see what happens here. So let's draw a vertical line here, around here. So here we go. We draw a vertical line here. Let's make it yellow probably. Here you go. So you got a vertical line here. So we see around this level here, price is up here. All right. Price is right around here. So your blue crosses below the red. So remember, we said that it's possibly it is a leading indicator. So when your blue crosses down below the red, it tells you that the possibility that price should decrease, because the blue is going below the red around the 80 in a downward direction. So we're looking for price to decrease. That's what we're looking for, a decrease in price. So if you're in a trade and you come to your charts and you see your stochastic, and your stochastic is saying blue crossing below the red in a downward direction, then if you believe and you know that this stochastic is a leading indicator, then you know from reading and from going through the academy that blue below the red is usually for a sell. So in your head, you're only looking for sells. You're only looking for sells. When you see that blue cross below the red, in your mind, your focus now is for a trade where price is decreasing. All right, that is what comes into your mind. So it helps you to focus you on the direction where to look for possible pips in the market. So here we look. Here we have it. So blue comes up, it crosses down below the red about this area here. So at this area, if you're trading at this point in the trade, at no time should you be looking for buys. All right. At no time should you be looking for price to increase, because your stochastic, which is your leading indicator, is saying, this price is looking to decrease. So in your mind, buys are out of your mind altogether. So here we go. So you see that at this level, it crosses at that level, price starts to move down. All right. And then it moves back up, and then it moves down. All right. It moves down, it moves down. But when you bring in now your PSAR or your SAR, remember at the bottom, when your SAR is at the bottom, it's pushing price up. When the SAR is at the top, it's pushing price down. So your leading indicator here says price is going down, but your SAR is saying price is still going up. So what you want to know to mar the two together, you want your stochastic and your PSAR to come together to say the same thing, the same from the same sheet, to go in the same direction. So your stochastic is saying price is going down. So your leading indicator already told you to look for sells, but you're waiting for now for your PSAR to set up, because you know in order for price to sell, for price to go down, your PSAR or your SAR must be at the top pushing price down. So if you have your leading indicator, which is your stochastic going down, which is your leading indicator, so leading means it goes out first, it happens first, then your PSAR falls into position. So you see here, your PSAR is at the bottom, your PSAR is at the bottom, and then somehow your PSAR flips to the top. So when that PSAR goes to the top now, above your candles, pushing them down, and you have your stochastic going down, you're telling yourself, look, I now have my stochastic seeing that price is going down or bearish. I now have my PSARs seeing that price is going down, which is bearish. So now I have these two indicators saying price should be falling. So now you look to get in the trade for your sell. And likewise with the buy. Here we go. Likewise with the buy. So here at this present point here, we know that it's oversold down here. We said before, below the 20, we assume that it's all oversold. The commodity what you're trading has been oversold. So after being oversold, we're looking for price to increase. We're looking for price to go up. We're looking for price to become bullish. So now your blue crosses above the red in an upward direction. So it crosses about here. All right, somewhere around here. So you want to believe now that if price has been oversold and now your blue has crossed above your red in the upward direction, you know your stochastic is your leading indicator. So you're saying to yourself, at this point now, where your blue has gone above your red, I'm not looking for any more sells at the present moment. I'm only looking for buys, because my leading indicator says price should be increasing. So I'm following my leading indicator, which is my stochastic. So I'm looking to go for buys, for price to increase. So at this point here, when the blue crosses up above there, I come to my candles and I look for my parabolic SAR. So here we go. And you see your SAR is below the candle. Your SAR is flipped just after here. It was above, pushing down, and all of a sudden your blue's gone above the red and your SARs have gone below the candle, below the green candle. So it's telling you my stochastic leading indicator is saying price should increase. My PSAR, my parabolic stop and reversal is saying price should increase. So you now in your trading, and you get to your charts and you want to look for a trade, you're looking for a trade that's going to the upside, as buying. All right. And that's how you put them two together. You have to mar them together. They're there for a reason. So you want to know that your leading indicator, which is your stochastic, that goes out first. So you follow your stochastic is a leader, is the one that goes out first. Then your PSAR falls into line. And then you, in your trading or your trading knowledge, will say, boy, it's time now for me to follow my stochastic and my parabolic SAR and reversal. All right. And that's as easy as it comes. I think that's as easy as it comes. But look at this chart now. I know time is running away, guys, but let's pull in what Mrs. Miller was doing just now. She was doing her what? Support and resistance. Support and resistance. So here we go. Let's look at this trade. Let's look at this trade. At this point here, well, let's look here. Let's look here. What happens here, guys? We are overbought, overbought, overbought. So price has been going up and up and up and up and up. So you can see price has been increasing. So your price has gone from here all the way up here. Your price is going up there. Sorry. Your price is going from here, pushed up here. All right. So your price is pushed up. It's pushed up there. Price is pushed up. Look, price is going up there, pushed up there. Really, really hard. Price is going up there. So it's pushed up. But what happens when it hits the top here? You can see now correlation between your stochastic, your parabolic SAR, and your support and resistance. All right. We put it all together now. We put it all together. So you got your stochastic is now overbought. Your SARs are pushing up. And your support and resistance right at this level here is telling you there's a possibility that it came here before and it rejected. So at that point now, you see at that point when it hits back here again, your leading indicator, which is your stochastic, the blue turns down below the red. So you're saying to yourself, the blue turns below the red in a downward direction. I'm at a level where the trade has come to before and is rejected. And then all of a sudden, my PSARs have flicked from the bottom. Instead of pushing up, they go into the top to push down. So you're saying to yourself, wow, it's all set up nicely for me here now. I know my leading indicator is saying to sell. My parabolic SAR reversal has flicked to the downside to say to sell. I've come to that area in the market that Ms. Miller talked about so nicely just now, about support and resistance. I've come to an area where the trade has resisted 4 times previously, looking to the left. So you have these 3 nudges now saying to you that, look, there's a high possibility this trade is going to reject off of this level. So you say my stochastic, tick. My parabolic SAR, tick. Support and resistance, ticked. And then you jump in that trade. And then you come to Mr. Law and you come out and say, okay, I've rejected off that level and I've pushed down all of what, about 180 pips. And you're trading at what Mr. Law says 0.01, which would be 18 pounds. So that's how you put it all together. That's how you put it all together. That's how you put it all together. And I hope that that little synopsis, I know time is gone, but I hope that little synopsis brings it all together for you guys, because that is a simple illustration of how you take your candles, your indicators, your support and resistance, and put it all together to formulate a trade. All right, guys, if you have any questions, put it in the chat. If you understand what I just went through, I know it's quick, but just put it in the chat. If you really understand, if you see how simple it comes together there, just drop it in the chat for us to see. All right, that is what it is all about. All right, that's what it's all about. That's what it's all about. All right, guys, and yes, it might flow easy for me, but the more you do it, it will flow easy for you too. All right, and that's, remember, trading is not it's not exact science, but when you can put things together to make sense, you will start to see the charts coming to life in front of your face. Okay, and as a beginner, and if you can do that, you can see your stochastic being your leading indicator. You can see your parabolic SAR reversal You can see your candles. You can draw your support and resistance lines, and you can put it all together to make one trade. You will see it all come together. All right, guys. And quick one before we close off tonight. Are there any questions that anybody wants to ask at the present moment, guys? That's it for tonight in terms of the education. If there are any questions you guys want to ask, we can try to answer for you before we close off. I know Ms. Miller said that next time, please come with your laptops and your computers. We want to see you share sometime. We want to see you. As when we go into breakout rooms in the next week or two, we're gonna have you to share, and so we can see what you are doing also. So guys, any questions? Any questions at all? If there are no questions, I know there must be questions. You guys, any questions at all? Was everything that we did tonight or this evening self-explanatory? Was it explained properly? Or is there anything that you want us to go over quickly before we close off? Anything at all? If not, we will close off our session tonight. Thank you, Dwight. But guys, we really do enjoy these sessions.
Excuse me, I have one question.
Oh,
Where can we find this recording?
BYOB Live. BYOB Live should be with us soon. So I believe we will be able to give you that bit more information as soon as BYOB Live is up and running. It'll be on YouTube and in the Telegram. Okay, Miss Dyer came through. Yes, it'll be on YouTube and in the Telegram.
So guys, it will be on YouTube. It will be on Telegram. So you can get out there and get on your charts and to practice. All right. What we want from everyone is that we want, when we are on BYOB next week, all recorders will be there. What we want you guys to be able to do is to get your hands to these charts. All right. When you get to these charts and you can understand these charts, you can draw the charts up, you can simulate the charts, and you can put together a trade for yourself. That's where we want you guys to be at. All right. And you get there by practicing. And the more you get hands-on from this level you're at now, starting out, this is the best time to make your mistakes when you're just starting out. All right. This is the best time, the best time. So thank you very much. And guys, it was a pleasure and a privilege for us, all of us, myself, Ms. Graham, Mr. Law, Ms. Miller, to be here for you tonight. And we hope that what we've done in this short hour-and-a-half session, that it would have taken you a little bit further to becoming a BYOB certified trader. And before we go, I love to read these affirmations at the front. They always make me feel good. And it says, Chattanooga, West Palm Beach, I am my own bank. All my trades end in profit. Milwaukee, Baltimore, those guys, it's wonderful to have you guys on tonight. And we hope that as we go forward in the next 4 weeks, finish in the next 2 weeks, the first round, then we have another section at the end, make it all 8 weeks. And then we do a quick assessment at the end to make sure you guys are where you're supposed to be. We hope that you keep coming. We'll be here. It's up to you to make the effort to be here also. So that's it, guys, for tonight. Have a good night. Have a good evening wherever you are. And please, please go to your charts and draw your charts up. Over and out from us tonight. That ends our call tonight.